you've heard me talk before. You know that I love the business model. And our business model, and the reason why Franco invested in us, is because they appreciate royalty generation. Royalty generation is where we go around the world, actually become the underlying owners of the mineral rights. We acquire those mineral rights utilizing our economic geological expertise. That puts smart people in the mineral belts around the world. We coalesce the data, collect additional data, illustrate prospectiveness, and sell to an industry hungry for discovery opportunities for a combination of cash payments, share payments, in-ground work commitments, and always a production royalty at the end of the day. We're the most prolific at this aspect of creating a portfolio of royalties. We've sold over 100 projects in the last 5 years, which is rather astonishing. To augment that portfolio of royalties that we accumulate through that organic process, which is largely putting early stage assets at the base of the pyramid, creating discovery optionality as those are being advanced by our partner companies. We also buy royalties, and many of the royalties within the portfolio we've purchased to augment that. David Harkwell, one of the founders of Franco-Nevada, one time said to me, "Dave, we think that the combination of buying royalties and growing them organically is particularly powerful. Good job." And so that's what we do. We've made $50 million doing strategic investments, which is a side business for us. We're utilizing those same geologists around the world, identifying investment opportunities. That $50 million USD that we made from that has been wrapped right back into the royalty acquisition and royalty generation aspects of our business. I just want to illustrate here how we do as compared to other royalty generators and other project generators, having sold 100 projects in the last 5 years. Many of the companies on this list I have a great deal of respect for. These are companies with great business model, but I just want to show how prolific we are as compared to the rest of the industry. And that has created a footprint now globally that is approaching 5 million acres of mineral rights, including all of our royalty positions. With strong positions in central and eastern Canada, we touch 12,000 mining claims in the western U.S., including the Leeville mine, which is currently paying about $2.5 million USD per annum from gold payments from Nevada gold mines operated by Barrick. Then go down to Arizona. And I'll pause here for a second. We can all do discounted cash flow analysis and think about what a royalty is worth based upon the reserves. But the reason why you want to own a portfolio of royalties is for discovery optionality. Someone else is paying to put in those drill holes and make those discoveries, and you want exposure to that. That's what makes a portfolio of royalties immensely valuable over time. And within this global footprint, we have 100 kilometers of drill holes a year being put into the early stage projects, not in the advanced mine site areas, creating that discovery optionality. And the examples in North America, the Park Salyer discovery recently announced, that's an ore body, copper in southern Arizona, or central Arizona, I should say. The Peak discovery being advanced by South 32. They just announced a really fat drill hole right on our royalty footprint. Another example of discovery optionality. Moving to South America, our largest cash flowing royalty is copper and molybdenum at Caserones. That's top lining to us pre-tax, so about 10 million USD per annum, with a nice discovery going on across the border in northern Argentina at Diablios by Abra Silver. They found the Jack Zone, then they found the North Jack Zone. That deposit just keeps getting bigger. That's silver gold with a bit of copper. I'm just delighted to be exposed to that. No cost to us. Putting drill holes in the ground, adding to the resource. It's a great thing. Moving up to Fennoscandia, Norway, Finland, and Sweden. We're the largest mineral rights holder of any company in that part of the world. A lot of drill holes going in the ground here with several different counterparties. One nice discovery in the making is at Espaladen. That's a sulfide nickel, copper, cobalt system with a nice high-grade drill hole announced not too long ago. That's with Kendrick Resources. They trade in London. I'll point out that the next producing royalty within the portfolio is Viscaria. That is a copper and gold system up in the Corunna district, which historically is an iron-producing area. This is the copper and gold portion of that iron oxide copper-gold deposit area. And we're looking forward to Viscaria being in production late next year. So the big news that Gwen mentioned, Timmok, one of the most significant assets in the portfolio. This is a royalty that I bought many years ago for a whopping 200,000 Canadian dollars. It's already paid 6.8 million USD and is currently paying at a rate of about $4 million per annum. There was a dispute around that, rightfully so. I see the counterparty's interpretation of that. We had our own interpretation. Happy to say we settled that dispute. The entire royalty agreement is completely rewritten. It will not be argued about again. We have a great relationship with Xinjiang. We found them to be honorable and good to work with, albeit slow. Took a long time to get it done. I told the lawyers better to get it right than to get it fast. And it is now done. Money's in the bank and will continue to be forthcoming. This is a generational copper gold asset, the largest copper gold deposit ever found in the history of Europe and put into production just a couple of years ago. So we're very pleased. They're mining in the upper high-grade zone right now, but they will get into the lower porphyry zone, they say, within 5 to 7 years. There's a slide coming up where I'll give you a bit more detail on that. Balya, this is one that I bought for $17,000 and sold it for $100,000 and a 4% royalty. That's now paying it over $1 million per year, lead, zinc, silver in Western Turkey. Gediktepe only has a 3-year mine life left, but still a good royalty. And these all accumulate up to some nice cash flow coming into EMX. I'm trying to go fast because I used up some of my time, Gwen, sorry. So, but I want to point out that the Gediktepe, Leeville, Balya are really building the base for strong cash flow as we transition from a junior company that's building a royalty portfolio to a mid-tier company with strong cash flow. And that's really backed up solidly by these 2 generational copper assets. We all want to be exposed to copper. The conservative mineral economists predict that we'll consume as much copper in the forthcoming 22 years as has been produced throughout all of human history. It's rather astonishing when you think about it. And I'm delighted that we're here today with exposure to Caserones, big copper molybdenum deposit in Chile operated by Lundin. They have been telling their investors that they intend to do aggressive exploration on this property, already has a multi-decade mine life, and they intend to increase production 20 to 25%. That's what they've told the market. At Timmok, Xinjiang, great operator, getting metal out of the ground. They're in the upper high-grade zone now. They just announced that they will invest a further $3.5 billion into capital expenditure to advance this asset in Europe. Okay, so what's that look like from a cash perspective? You can see that the royalty income at EMX continues to increase, so we've become distinctly positive cash flow. We have had some big wins in the past that were not from recurring income, such as the sale of our Malmus project. That was a strategic investment. We took that money, wrapped it right back into the portfolio. Now we're seeing the results of that, and we've ramped up. I'm happy to say that 23 will even be a better year than 22 is on this graph. This is fortuitous, but it has worked out that about 50% of our royalty revenues come from strategic and base metals, and about 50% from precious metals dominated by gold and copper. Big discovery at Diablios. I suggest you look into this. I mentioned that before. Park Salyer, some fat drill holes here. We believe there's a lot of exploration upside at depth as well within our royalty footprint. And then this significant discovery that South 32 is making in southern Arizona at Peak, where the last drill hole that they announced was 346 meter% copper. Very nice drill intercept. So another aspect is that we do have Franco-Nevada as a shareholder, and we also just announced a joint venture with Franco where we're going out to look for early stage royalty financing opportunities. We're delighted to have increased communication with and synergies with Franco-Nevada. We have a great deal of respect for them. Our stock price chart, if we look at this, it's a 15% CAGR over 20 years, which is good. That's not bad. That beats the S&P. But if you look at this and you dissect it, coming back to your comment, Gwen, about the cycles in the business, there's 4 times we've either 6 to 10 bagged the stock price within that 15 years. I believe that we're in one of those right now, created by the fact that we had the cloud over our stock from the Xinjiang issues that has now been settled, and from an overall downturn in the market as per Gwen's comments. And I believe it's created a great investment opportunity at this moment. Thank you.